Good afternoon, everyone. BC Richfield here, coming to you live from London. And today I got it right because we've been doing most of the shows at 1100 UTC lately to account for the daylight saving adjustment in the US. So a very good morning to everybody where it's morning in the world, a very good afternoon to everyone where it's afternoon in the world, and a very good evening to everybody where it could be evening in the world. So what you'll notice at the moment, before we dive into the show, just want to say a really big shout out to all of you that are watching this live at the moment. We've been getting about 4,000 or 5,000 people pretty consistently watching these live every week. So just want to say a really, really big shout out to you all. Really do appreciate you being on the show with me here. It's BC Richfield on behalf of the Burb Nest and our wonderful talisman, Crypto Burb. So as you look at your screens at the moment, you can see Crypto Bird's profile on Twitter is on your screen, and that's because we still have our paid Discord open for free at the moment for anybody that wants to come along and join it before the end of March. All right, so we're closing it down at the end of the March. The whole idea was we opened it up for the whole of March to help everybody get on track, with the idea being to help everybody get on track to maximize your opportunities, as we're kind of starting to see at the moment. Now, I'm going to run you through everything on the charts. I'll run you through the analysis from the Bitcoin report that was posted by myself last night to members, why the thought process is behind that. But one of the other things that I want to do, and I just want to give people just a little bit more time to come through, because we normally wait a few minutes, excuse me, and then we get a real uptick in people coming in, because I want to cover some of the news with everyone this week. I think some real good feedback from members and other people on Twitter and social media, etc., recently have been saying that they found a great deal of value in the kind of economic coverage, looking a little bit more at the macro, what's going on with traditional or legacy markets, equity markets, if you like, but also a little bit around the news. Now, for someone like myself who has a great interest in, traditional markets, in equities, in FX, but also, when you're in those realms, the news plays such a major catalyst. Anybody that's very kind of insular with cryptocurrency will see that, the fundamental drivers, the on-chain drivers that come into the space, especially in bullish market conditions, right? But what a lot of people fail to kind of decant or even necessarily look at a lot of the times is the economic data, is what's going on in the US, what's driving the markets, all right? So we're going to take a bit of a closer look at that today as well. So please do let me know, reach out, let me know if you find this useful. It's something I'd love to make a little bit more of a feature and really kind of help, people to kind of start their weeks off in the right way. So without further ado, let's jump on to some charts, right? So big shout out to everybody in the chat, by the way, as well. Apologies if I've missed you. Sebster, Really good to have you on here with us, my friend. Yes, certainly if we get time and walk towards the end, we'll take a look at what have you got? Alf, Render, and ETH. Yeah, for sure. We're going to take a look as well and kind of, really kind of try and weigh up what we're looking at here for alts as well. Still ultimately very, very cautious over major risk assets. We might be seeing a little bit of a risk bid coming in at the moment. And we did towards the end of last week, as well as bonds start to call off the dollar as well, which is what the US markets, or not the US markets necessarily want, which they do, but what Trump really wants, right? And the US in terms of refinancing that debt, which we're going to take a look at with April 2nd bearing down on us, as well as tariffs come into play. So I'm going to just give you my thoughts very quickly here on Bitcoin. First of all, I'm going to share with you what was shared with the members last night. All right, so that you can see what the plan is for the week. Now, keeping this very, very simple, this was a very, very key area for us down here. We had this really long low. Yeah, so this was the low point when this candle closed, confirmed this as the low, the swing line. And look at this down here, this long downside wick. So always expecting some kind of reaction when we get to a key low or a key high. All right. Also, the other areas of participation I'm particularly interested in are these gaps, inefficiencies left with a failure of order pairing. You see these in these really strong moves up or strong moves down on all time frames, and they really, the market, wants to be efficient and often revisits these gaps as well. So, Daniel, hello, boss. How are you doing? Thank you very much. Nick, my friend, how are you doing? Dominic as well, the micro psycho. That's a brilliant name. There's a rocket incoming. Final correction should bottom tomorrow. Won't go deep. Max 83.5. More likely a retest of 85k. Okay, really interesting points, mate. I mean, love the name, everything like that. I don't agree with statements like we won't go deeper than this, because I don't think anybody really knows. But I think it is important to have those kind of levels that we're looking at. I would imagine that what the market's really looking for is in a catalyst is some clarifications over the tariffs, whether they're being used as a pawn in a game to kind of reposition for negotiation deals, how they're actually going to wash through starting on April the 2nd. The bond markets, right? We're going to look at this all in a bit more detail momentarily as well. But I like your conviction, and I love the name, the micro psycho. I think it's absolutely brilliant. We got some great trader and people handles on here. So without further ado, let's take a look at this, and then we're going to dive into the news. Okay, so what happened? Price swept liquidity. This is on a weekly scale on Bitcoin. Price has then corrected, come back above this level, showing us an initial amount of strength. Okay. Why is that? Well, when you're sweeping out a low like this, what you're really looking for continuation is a strong close, meaning the body to close below the low, showing the fact that there's a lack of absorption here, that buyers just aren't stepping in, okay? What has actually happened is once we close back within here, we expected a bullish week last week, and we're expecting a little bit of continuation this week as well. We have a weekly order block here, right? There's the up close candles here. Well, for me, I'm focused on the bodies, and I'm looking at both of these because they're consecutive candles. They've swept liquidity from the high. Again, look here, sellers stepping in, forcing price back down below this level, telling us that we could be looking for a correction. Now, you don't know if it's coming back, to retest these kind of levels or if it's going lower. But what we do know is, if I zoom in a little bit, if you never actually got a completely clean retest of this order block after closing below it here. So this looks at the moment like this is what's drawing price higher, all right? So that's what we want to take a look at now. We're going to find a little bit more granularity down here on the daily as well as the H4, all right? So we'll open that back up when we go on the H4, and we'll kind of do this from fresh here, all right? Now, the reasoning behind this and looking for this bullish continuation, kind of grinding up in a very tentative manner at the moment. I mean, for example, look at this. What did we do? We had this drop, price consolidates sideways, then you get that impulse move, little recovery, consolidation, impulse move again. What we're seeing here is a little bit of a lack of impulse, right? You've got price kind of grinding its way up here. We did fill this gap, so we're not really worried about this gap now as well. The gap that's kind of capping the market at the moment is this one, all right, which is here on the daily. So we're going to pop a D in there so we're aware. So what I really want to see is, and we'll cover this in a minute when we look at the 4 hour. The 4 hour plan was really simple, actually. The 4 hour plan was to trade price into this high. If you want to take a look at that a little bit closer, if you're a member over at the Bergness with us, you can obviously get the report daily from one of the team. Mine was the one last night. I'll show you the 2 key levels we were aiming for. But ultimately, this swing high within the gap is a really good liquidity pool. So intraday wise, we were looking for pumps into this area. We got it obviously over Asia and into London this morning. Now what I really want to see is a daily close above this gap. Yeah, so we want to invert this gap. We want to turn it from resistance to support, and then we can play whereby we get that close, we look for any pullbacks, and then those pullbacks after longing up to this high here, and then the high that rests here aligned with the weekly order block. All right, so that is the playbook at the moment. As of today, pretty flat at the moment, depending on what session you're trading. All right, we saw beautiful recovery here over the weekend. We had that little pullback here, very flat Saturday with trading, and then this really started to take off here. Now you get the pre-market coming to play as well late on a Sunday, and I think people positioning for the risk bid here a little bit based on the news, and I think that always then was going to flood through. First of all, into equity markets, we saw that pump on the S&P 500 and the NASDAQ. With that kind of risk bid being in, then we saw off the back of that how price and capital started to flow into cryptocurrency, right? Obviously, over the weekend, you know, Sunday and that as well, we've started again this morning where some alts start to really pop off. So we are going to look at some key levels and the areas that I'm looking for price to hold and to push on as well. B, hello, my friend. Very, very kind of you. Welcome to the show. So let me just get rid of the session breaks for a moment. We favor them for our intraday trading. And today we're going to look at things on a slightly longer term scale. So the two targets that we had from the Bitcoin report was here and here. All right. In fact, I think they're probably hidden around up here somewhere. Yeah, there you go. So if I just delete these, we'll turn the ones on from the report from last night. And we had the rectangle, which we see down here was the H4 gap we're looking to hold. And then the two targets, which we can see that we've nicely reached now as well. And actually what's quite interesting about this one is, you know, looking to this level here to hold. All right. So when we see these kind of highs and lows and you take them out a little bit like this one here, right? Now, it obviously wasn't the biggest close in the world above that, but when price did close above that, I'm then looking for this area to hold around here. If we start coming back down pretty quickly and closing underneath, then I'm looking for the gaps that sit below, like this one here, this one in here as well, or these kind of down close or bearish candles as prices then pump, because for me, that's where the buyers kind of stepped in for this move. This is where the buyers stepped in for this move. All right. Jesse, good morning, my friend. How are we doing? Actually, afternoon. I keep getting that wrong. I am absolutely terrible in these kind of changeover periods between the US and the UK as somebody that trades mainly US equities, like, you know, S&P 500, NASDAQ, etc. as well. So where does that leave us? Well, it actually leaves me a little bit cautious at the moment, right? Because like I said, I want to see a daily close above here. I think that any pullback into these regions could give us a good opportunity to buy. Again, I'm not just kind of blind and actually looking for price to kind of have a healthy correction. So what do I mean by a healthy correction? Let's give this some context. So let's look at these recent pumps, yeah, and also dumps. So we're just going to use a very simple Fibonacci here from the low of the move to the high up here, and we're just going to put a fib on that. Now, what I'm really looking for here, when we have these pumps here, so you want price ideally to take liquidity from a low, take liquidity from a high, creating this expansion leg of price, all right? So within here, then quite often what you see is people FOMOing in quite high, and these corrective moves then come and take them out. So often looking for price to correct down to this 50% level of the Fibonacci or towards the golden pocket. And then within here on a lower time frame, you can look for catalysts such as, you know, your market structure shifts, for example, is one of my favorite patterns. You're looking for a sweep of a low. Now, what you want this to be is into a key level. So let's imagine that this here, the red line, is this 50% on the Fibonacci. We see a lovely strong recovery here, and this is where we can then look to get on board. So why am I saying that now? Well, I just want to run you through this very quickly, because as we look at this expansion leg, we got back down to the 50%, right? So let's get rid of that for a minute. Then what did we do? We took liquidity from here and also from the highs. So we're up here. So this then becomes the expansion leg. And what did we do? We reacted here, some decent short-term plays, right? But then this is where we really got that key reaction. Now, you might be asking why I'm not drawing the low from there to there. We took liquidity from the low, but we didn't take it from this high, meaning this price action is contained within this Fibonacci leg or this expansion leg. So while we hold these levels, if we start getting closes below this, then I'd ultimately be thinking price is seeking liquidity lower in the form of these swing lows, but we didn't get that. We've held that level. So why is that important? Well, if we look at this here, then, you know, what will happen here is people will start to FOMO in. Yeah, people will start to be buying here. They expect this thing to do that, but they'll buy before there's any confirmation. All right. So you can miss moves like this. Of course you can, especially on crypto, because it can just run incredibly hot. However, and if we look at this expansion leg here as well, yeah, obviously including it to this high because it's before this happened. What did we get? We got the expansion. We got back down below the 50%. While we're in here, you can look, and just to give you an example, you drop to say a 15-minute chart. You wait for price to have a nice recovery. You see here failing with any kind of real impetus here. All right, failing to get that big expansion, leaving those gaps for us to get on board. We did get one here, for example, a little bit late in the day for me, but actually the one of real interest happened here overnight. Yeah, between Saturday and Sunday, right into the Asia session. You see price kind of grinding down here, and then we got that lovely expansion ultimately, setting the uptrend for there. So, excuse me, I'm not going to go into trade triggers and bits and pieces, although a very dear friend of mine and a wonderful price action trader and one of our traders over at the Bird Nest, Just Pitt, who's been making some unbelievable calls in these conditions, has just released a post in his private channel about his triggers, how he enters and plays this market. He's one of the most profitable traders this year that I've come across, right? So if it is something you're interested in, you can come along, grab your free membership until the end of March. Hopefully you stay with us beyond that, but if you choose not to, you come and gobble up all the resources you want in the interim, all right? So anyway, before I digress too much, that's important because that's the area that we reacted there, the area we reacted here, the area we reacted here, etc., etc., etc. So what am I looking for here? Well, that's why I'm saying that any kind of pullbacks here, whether you allow it from this low here, which I will because this is the low that took liquidity, all right, up to the high. I really like the look of this area, right? And what sits in this area? Where can I get confluence from? Well, quite simply, I've got this down close candle, which can act as kind of a small interim order block. Yeah, so you can look for that retest. Really like this very, very skinny gap here. All right. And that's kind of ideal world scenario. So what would we see? We would see a corrective move down to here, allow us to get our bids in and then move higher, obviously based on confirmation. Now, we might not obviously retrace this far. Another area that I will have my eyes on is this 4-hour gap here, and it actually extends to the gap above it as well. Now, I think the gap above it is probably still a little bit too high here. If I move this to say like a traditional Fibonacci, God, if I can remember what, there we go, that one here. So you've got this one here that sits around the 382 level as well. Now, excuse me, one of the ways that we use Fibonacci's to identify how strong a trend is when you're measuring the trend going up using a fib. If you're setting a high and then you're reacting at, say, the 382 level or the 236, and then price is setting a new expansion leg, well, then you can see really that there's a lot of strength in the trend because it's not even getting to correct below the 50%, let alone to the golden pocket, all right? So with this sat at the 382, I'm going to watch this area here, and then I'm going to this area here. So long and short of it is I'm actually looking for corrective moves lower down to these gaps to see how price reacts and then see how we move up from. Now, obviously, we can also move down as well, and I'm going to utilize these gaps for that very reason. All right, Anthony, hello, mate. The word gap, more comprehensive for me now. Thank you, BC. You're very welcome. Anthony has been over with us at the Bird Nest for a little while now. Really, really, really good, hard worker. So in the charts every day, asking good questions, looking how to kind of understand gaps better, liquidity, and kind of plug that in to his trading system. So great to have you with us, Anthony, and really, really glad you're enjoying the resources. So that's really it for me here on Bitcoin. You might say, well, what if price just runs really hot from here? The problem that I've got here is we are just smashing into resistance here. All right. So the gentleman earlier, the micro psycho, or maybe a lady, not too sure. Either way, plenty of talented women in this space. So by the way, guys, when I say guys, I do mean men and women. Me being inclusive does mean a lot to me. We've got some tremendously talented women in this space who should be celebrated as well. And you were kind of saying 83.5 to 85k. So, kind of 83.5 is down here. So maybe kind of taking out this swing low down here, which, yeah, could see that happening. The problem is at that level of a deeper correction, especially on a 4-hour scale, you're going to risk losing some structure. So let's take a look. 85 level I like because if we're looking at it around here, give or take, what have we got again? Well, that's where the golden pocket was sat. That's where we're drawing down into this gap. So if we do get that deeper corrective move, then that's what we can look for. Yeah, so Anthony, another quick question. If we close under the gap, it means we want to go lower to seek cheaper price. Yeah, so certainly the way that I look at it is if you start getting closes below these gaps, then what happens is we invert these gaps, right? Meaning that you'll see on my chart, the box turns to purple. Then what I'm looking for then is I'm looking for price to find value lower, right? So then I'm looking to the next gap or the order block. And then violations of these gaps. If I'm wrong here and I get stopped out, right? And then price reclaims this gap, obviously not like that, but price reclaims this gap, the bullish candle, ultimately, this should be green, violating this area, right? Then this invalidates, and then this is what I'm looking for here, looking for price to pull back to this area and then trade it long. Using these gaps to give me an idea of how the market is reacting, right? Because typically if price kind of tags into these gaps, you want to see a pretty strong reaction. And if you do, it can give you an indication of whether the buyers are kind of stepping in or the market wants to go higher. Just trying to find a decent one for you here. As we obviously saw, we got that lovely retracement here, you know, and ultimately held. I'll just do it in green so it stands out. This beautiful bullish gap. Look at the absorption from the wicks. The bodies can't get below it. And then once you get into this point here, I'm then looking higher and saying, okay, well, where's the very next key point of liquidity here? Would have been that high. But ultimately, price really being drawn up to the key highs that we're here and the external high, which is over there. All right. Grivaldo, hello, mate. Let's have a look. Do you think there's a bull trap or a valid recovery? Really, really good question. Let's take a look. And we can indeed, my friend. I love that. Is that a little cheeky Assassin's Creed logo as well? I used to love that game. Bit old school. I was much more a player of the first game, but a magnificent franchise. So, bull trap or valid recovery? Great question. We'll cover that in a minute, and we'll take a look at Ondo and Tier as well, my friend. Yeah, no problem. So, in terms of that question, I think it's a really good question here from Grivaldo, right? So, is this a bull trap or is this is this really a valid recovery? And actually, I'm not as interested in this chart as you might think to kind of work that out. So what we're going to do is we're going to look at the news very quickly. I've given you my parameters for here. I want to see a daily close above this level. Same principles on the gaps, right? You want to see these gaps holding. At the moment, this is a bearish gap, right? So think of that as red. So for me, this is me. My system's not advice to you at all. But for me, this is a no trade zone in terms of going long. Right, longs for me were beginning of the London session, but over Asia especially, which I wasn't present for. I was actually sleeping. By the time we came into London, we'd seen a kind of lion's share of the move. But anyway, we still had clear upside targets to trade to. So as long as you've got, the wraparound market conditions to have that belief in that impetus that the market's going to move there on the risk bid, which is what we're going to discuss now, then that becomes of great interest to me. Anyway, this is a bearish gap until proven otherwise. Proven otherwise is a close above this, in which case I then look for this to become support. You see that's a purple box on my chart. And then from there, we would look to move higher, targeting this high, which is around about 92,766. And then the swing high here of 95,025, which is sat right atop this weekly order block that even though we got a daily test here, we haven't had that weekly retest yet. So they're the key areas. That's the playbook for me. We're just simply too high here on a 4-hour scale. Price could absolutely ignore me. By the way, you can get these major catalysts in the market. Price could do something like that. That's fine. I will wait until tomorrow, patiently wait for Monday's range to find the key support levels, which will most certainly be this daily gap if it's inversed. And then I'll look to get on board something like that, or if we've left any clear and obvious bullish gaps in that kind of area. All right, you won't catch me chasing price. You will not catch me chasing price. So yeah, that's where we are on Bitcoin. So now what I want to do is I want to move you over to a new segment that I've added, and I want to really kind of get you guys aware. As long as you enjoy it. If I get a lot of hate mail about it, then I might drop it. But in truth, it's going to be what's very good for most people, is looking at the news. So I just want to give you a really, really quick news overview here. And there's a couple of things that we're going to do. We're going to take a look at the economic calendar. All right. So, week starting 24th of March, we're going to look at what we've got coming in and hitting the US markets, which is our main key focus. But there's a lot of news coming out of China and Europe that I want to cover with you quickly as well. I'm going to rip through this so we can focus. I know most of you are probably here for crypto, but please do believe me when I say that the most successful crypto traders that I know and investors all have an incredible handle on traditional markets and their part to play, especially when we're looking at this from terms of whether we're in a risk on or a risk off environment. So looking at the calendar that we've got here, I'll just quickly run through this. We're Monday, 24th of March. We can see 145 today in the US markets. We have flash manufacturing PMI and flash services PMI coming in as well. So what we want to see here, so if, by the way, if any of you are ever in doubt, Forex Factory here, no association, by the way. One of the ones I love to teach with or love to work with students on, because they give you these great explanations under their little detail column. So if you're wondering what these mean to the markets, also why we're focused on the US, because it's the biggest market participant here, this will really set the tone for other markets, especially in crypto, right? Obviously, if you're trading Euro, GBP, etc., or any of the currency pairs, you really want to be locked into this news. But I know that's probably not really, this audience. If we go on to here, look. So measures. Level of the diffusion index based on surveyed purchasing managers in the manufacturing industry, all right? Actual being greater than forecast is good for currency. Yeah, so we saw that last time with a good positive print. And basically, what you're looking for, to why the traders care, yeah, it's a leading indicator of economic health. Businesses react quickly to market conditions and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy, all right? So it's looking at economic health. What is it like in the US? What's the manufacturing services like? And that's what we're looking to measure. Ultimately, healthy data coming through in that means that, that's why they say it's good for the dollar, because it shows that America's strong. It shows that it's underlying its data with good manufacturing numbers, the same way as we look at with retail, etc. And therefore, you look at it last time, we had good PMI, PPI print, we had good CPI print as well, that really failed to launch that major catalyst that we were looking for in the markets as well, all right? But, we need to obviously decant this. There's a lot of other stuff to pour into the mix at the moment, which I'm going to cover with you momentarily when we look at things like tariffs and what's going on in China, etc. as well. So, and this one all makes sense, because when you look at the data, when you look at what we were discussing last week, it really plugged into the fact that we did have that good bullish reaction. So, if you look at these things, they can set you up in the right ballpark. Then you can look to refine that to your entries, etc. So as we go down the week as well, we've got Monday out of the way. We have a benign Tuesday, nothing in terms of news going on then, exactly the same as we see on Wednesday. Again, focus on the US markets. The key thing that we have here is running through on Thursday and Friday. So we have unemployment claims coming through, and they actually beat the figure by 1,000 on the last print. Meaning that it's just shown that there's less people putting in for unemployment there. Well, again, signs of a healthy economy. And again, we're going to talk about how that kind of washes through and doesn't wash through in terms of what the Fed want and in terms of what Trump wants, all right, the president. And then on Friday, we can see here core PCE price index month on month as well. So again, if we want to pop onto here and look at what PCE is, change of the price of goods and services purchased by consumers. This excludes food and energy. You notice that with core very often, right? Excluding food and energy in this front. So why traders care is the Federal Reserve's primary inflation measure. Remember, the whole conditions we're in at the moment is because the Fed are trying to curb inflation. They're trying to stop America running towards a recession. We're seeing the fallout from all the way back in COVID with the quantitative easing, when the money printers went on. It devalues the currency. It also drives the prices of everything up. Okay, the tariffs are going to do something similar here as well, which is why we do need to be careful. But it might be a situation where the tariff threat has been so large, and why Trump has come out with such exorbitant tariffs so that they can be dialed back. Ultimately, the market then prices that in at the worst case, or a kind of median of that. Then if it comes in better than expected, which is why we're seeing a little bit of a pump in the markets this morning, because Trump has said, these tariffs might not be as severe, or actually his exact wording was, they will be more targeted, making people think that, okay, actually maybe the risk bid is on, and we're seeing that wash through at the moment, all right? And then inflation is important to currency valuation because rising price leads the central bank to rise interest rates out of respect for inflation containment mandate. The other thing that we got to look at here as well is the US refinancing at the moment, which we're going to run through as well, okay? So again, couple of key days here. I would say when we're looking at this at face value, depending if you're an intraday trader, position trader, swing trader, etc. Once this data washes through today, we've got a pretty clear run of it into employment claims coming through on Thursday. So actually, what does that mean? Well, it means the foundation is laid in order for there to be a continuation of the risk bid. Let's have a quick sip of tea. We're going to get off of this, and then we're going to go on to Reuters very quickly, and I'm going to just cover you through Let's have a look where we are here. Perfect. All right, just going to cover you through this. And I'm just going to go through the headline stuff at the moment. So the S&P 500, so it rose about 1%. The euro's holding firm above $1.08, which not too long ago, with everything that was coming in, with the what we were looking through in terms of the news washing through, and the data was looking that the dollar might reach parity with the euro. So that's quite good, and it's buoyed off the back of European markets doing well also. So we're going to cover that here. So look, it still says here, traders brace for news on the tariff barrage. Or there's been an update this morning with Trump saying, statements such as, and let me just pull this up so I don't misquote, all right? Yeah, so he said they're going to be more targeted, right? We need to remember you've got April 2nd, the tariffs are starting to come through, all right? Tariffs, looking at scaling them back a little bit. So facing scaling them back. That was other words that came out this morning as well in the news release. Again, showing positivity for the risk bid. Now, Treasury's falling, all right? So, markets are looking positive on the risk bid. As Trump said again, targeted tariffs, all right? But remember, these probably won't be finalized very quickly, least of all by the end of April. So it's probably not going to be the quick injection people think. Again, they're being used also as a kind of, negotiating tactic to bring to the table under favorable terms. Now, S&P 500 and the NASDAQ, NASDAQ especially being very, very heavy with tech stocks, up on Monday, driving the risk bid. That's what's good for cryptocurrency. It's showing that investors are there and they're willing to take on that risk bid at the moment. That's also being aligned with the fact that we've got the falling yield on the treasuries, right? With a focus on the 10-year yield, which is what the US, certainly in my opinion, and not just mine, obviously much, much better economists out there than me, but looking at that with the US in April, Q2, due to refinance multiple trillions of their debt, they're going to want to do that with the bond yield as low as possible, because they're going to sell those bonds. Their central bank will buy those bonds almost certainly. Money printers are going to go on, and that's when we're going to really look for that risk bid to come in. Now, we have a very data-driven week ahead, right? We've got China earnings. We've got to remember the Sanyang, the index over there, and you're looking at that being up 18% this year, right? Why? Because you had that injection of money into the economy, right? Sorry, you had that fiscal stimulus that's gone in, exactly the same as what happened here with COVID or any other QE. It's basically the money printers come on, they flood money into the economy. Now, the risk of that is inflation getting driven higher, but ultimately the risk bids are catching, and China are doing well off the back of that. Now, we have seen this fall back from the highs, about 4%, right? And now it looks like the market's starting to kind of consolidate a little bit there in the idea that they want to see more news coming through on the tariffs, all right? We've got to remember China's economy is still incredibly strong at the moment. They've got economic easing in play. If you look at the news headlines this morning, BYD making huge waves in the EV market, all right, really challenging Tesla. I don't know if anybody saw the news release that they basically got that car now that is, you're able to charge it as quick as you can fuel a car from a petrol pump, all right? So they're really kind of shaking things up there as well. And like everybody, in the industry, certainly in trading and markets, always used to say, China used to kind of, they used to reproduce or copy things that were coming out of the West, and they would have that ability to produce them at much lower manufacturing costs. I just don't think that's the case anymore, and a lot of people don't. China are really at the heart of innovation there, especially technologically, right, which is really driving their market, and they're now looking to really take this to the US and the West in general, let alone the rest of the world. So you really need to keep an eye on that, both in manufacturing, but especially in innovation. All right. So yeah, looking to gain more market control there. The other thing we've got is US Treasuries as well. So, US Treasuries, Trump wants them lower so they can refinance the debt at a cheaper rate. They're now down 38 basis points from the highs in February. Okay, making it a little bit more attractive, but I really do think that they want them lower. They want them, they want them in the 3% kind of region, high 3% to mid 3%, I think, but definitely below 4%. And Europe, really good news coming out of Germany on an economic front. Data washing through really, really well. Manufacturing production increase and economic easing is in place there as well. Again, fiscal stimulus coming into the market. So we can really see Germany that flies that flag as the real kind of strength of Europe, the backbone of the European Union there starting to come through well. So again, going to see that kind of come through into the Eurozone. Now, Bitcoin is the other one as well. A good friend of mine, Quentin Francois, read a piece of his over the weekend talking about looking at the on-chain data of how whales are buying quite aggressively at the moment, all right? So, Bitcoin whales buying, accumulating from the on-chain data makes sense to me why it's in and around these kind of prices. I see it much more as value, and I think that a lot of people, fund managers, etc., will see that too. So I hope you enjoyed that. I tried to keep it a little bit condensed. You can find the link through to that Reuters article or tap me up on Twitter. I will send it across to you. But it's a really good way to start out the week, and then basically use that to decant it across. Let's just take a look. So we've got a couple of questions here as well. Aussie Grow Me, hello mate, great to hear from you. The Micro Psycho, 100k in the blink of an eye, catch everyone napping. Blah blah blah. Yeah, well, yeah, it's an interesting point. I think cycles do differ though. They're not kind of as predictable as people think. But good luck if it does happen through that. Wonderful. I still think you need QE and a lot of economic data to kind of wash through as well. So I think it's definitely worth keeping an eye on to that. And all financial releases are accentuated organic movements. That's why they keep changing their minds to run with the market. Not necessarily, no. The economic data is often used as a control mechanism as well. You've got to remember Trump coming out and kind of going really, really heavy on tariffs. Why? And why, when everyone's talking about him making enemies of his allies and bits and pieces, it's not. It's as a market driver to move them on. Ultimately, politics and bits and pieces drive markets and can often be a fighting force between, policymakers, financiers, etc. So you look at the difference, say, for example, between Trump as the president of the United States versus, Jerome Powell, head of the Federal Reserve. Trump very, very vocal in the fact that he wants rates cut. Powell saying no, the dot plot, all the data that they're putting through is telling us that at the moment we're on track, we're bringing inflation down, and we're not going to risk that. Going to be really interesting with the debt refinancing, kind of, to throw that spanner in the works, if you like. So we've got a few alts we're going to run through before we close up the show today. We're going to start on Ethereum. Let's have a look. What one were we on? I think we were just on this chart, weren't we? So let's see what we've got. Let's look at what we were looking at previously and see what we're getting. Right, so we're down here, barely holding on to this kind of key high time frame pivot point. Again, just simple support resistance flip is a really large area. So really just kind of looking at this in terms of how price is kind of engaging with it. Are we seeing the recoveries, etc.? And yeah, absolutely, microcycle. It is all a game. Completely agree. And a gamble, right? Ultimately, what we're doing is we're looking to put risk measures and information together to build strategies that give us a little bit of an edge in the market. To just gain that little bit of a small percentage here and there to ultimately come out on top. So on a weekly scale, what's really changed? Not a lot. Quite good that we kind of held this area. We moved down into here. We just kind of came into this gap over here, all right, and then we saw a decent reaction here. Now we're kind of within the hole. It's not really telling us too much here. So as we move down, we were looking at this gap. Let me just get rid of those for a moment from a lower time frame, so we'll clear that up. Yeah, so we saw this bearish go over here. What do we want to see? Price closing above this, flipping it to support, which is exactly what we've got here. And now price, it's only a slither of a one here, but again, as we look at our kind of gaps, we can see price holding this area really nicely at the moment. And now looking to move up. I'm quite interested to see how price closes above these equal highs. These normally really, really key liquidity pools. If you're going to see a rejection here, then almost certainly be at this point. So want to see this again, strong close above here, looking for this area to be retested, and then for us to, drive this higher on a daily scale. This was the area we were looking for price to close above after the big drop. Now we know that was a really, really big ask. And then as we were looking here, right, we can see we got that shift. We got an early stage of it here. We held it. We keep holding this. Basically, when you're looking for these kind of tentative shifts, or if you're trending, one of the things that I'm looking at on here is price coming down, looking at the down close candles. Yeah, if price is selling off, are we holding beneath the bullish candles, the up close candles? Yes. Here, we didn't close below this. We then closed above this here. So we're saying, okay, maybe this is the kind of area that we get to look at that, that slight recovery. Anthony, unfortunately, I'm probably not going to get around to all these questions here, mate. Ping me up when we're in the Nest chat later on, and I'll look to cover all those up for you, just because we're running a little bit short on time. Let's have a look. Gerard Crypto. Afternoon, boyo. Love that. Reminds me of my wonderful and late grandfather, who was a Welshman from Aberystwyth, always used to call me boyo or boyo bach in Welsh. We certainly can, my friend. Be happy to close up by taking a look at Zil for you. Awesome, Anthony. Yeah, hit me up in the chat. We'll get that covered for you, my friend. So, yeah, I think on a daily scale, I think it's pretty clear. We kind of hold this area. Let's not forget as well, closing above this area here, if we're using our kind of, order blocks as we're looking at here, if we're looking for these down close candles to respect price higher, then this is what we want to see. Price closing above here, setting the daily order block, looking for this whole area to hold as support. Ultimately, we're seeing a bullish recovery here. And, if we don't get back below these equal highs, one of the good things on the daily scale here on ETH is actually the next swing higher is, a decent distance away, right? So we're looking at that here at 2,319 here on Bitget, all right? So, actually, not on Bitget, so just on the regular crypto chart. So that's 2,319.88. So while we hold that, I think that's looking quite good here. On the 4 hour, if we want to bring a little bit more granularity to this, where could I see price correcting to? Well, we have this really nice 4 hour gap that's developed here, meaning that this is the area we want to see hold. We want to see price into this and then moving higher, so that when we look at it on a daily scale, we've got that close back above this level, and it kind of gives us the indication that price is ready to seek liquidity higher. Again, any closes below here and price is, more likely to seek liquidity below these series of lows, which is actually building up a really nice liquidity pool to the downside with failure swings, leading the way down. That's my thought process here on Ethereum. Now we're going to take a look at a few other tickers before we finish up. Let's have what we've got here. Alchemist AI. AI still being a really, really hot narrative here as well, right? So let's take a look. So on a weekly scale, this could be about a key move here, because this is the gap that's been, suppressing the market for some time. Move that back here and change it to the right color. All right, so that's our weekly gap. Price is now looking here. I mean, look at this expansion here, right? That's the one starting today. So let's not forget that we've got a long way to go in the week. However, something that was interesting last week, and to be honest, my eyes have not been on this, maybe should have been, because I do like the AI plays. But something that's definitely got me interested here is the fact that last week's close set this weekly order block. These down close candles is that first change in delivery. So with price being above here, I mean, look, on a weekly scale, we can see these highs up here, really, really kind of drawing and tempting price higher. Now, on a daily scale, I'm kind of looking across here and saying, well, we got this really kind of nice high over here, a high that rebalanced this gap as well. So we do look at these highs to certainly offer some form of key liquidity. So, we have this gap over here. If we close through this on a daily basis over here, then that for me is a really interesting level. So once again, as we were looking for on some of the other tickers, we're looking for the daily gap here. And then if this comes in and we hold this here, then I think we're really looking a little bit higher, okay? So again, this is still a grey box here on the weekly. I'm going to just pop a W in this so it's nice and clear. That at the moment has not been closed above. We need that for the end of the week, but obviously we need to see a lot more data run through. So on a daily scale, we can see and take this as an early stage of the recovery, closing above here, drawing back down to this level here, also into the highs of these wicks, which are yet to be retested. Hold this area, and again, I think we move up from here. We just really don't want to overcomplicate this. So moving down onto the 4 hour, just for a bit more granularity, nothing really of interest. Big, fast, inefficient move up. Again, probably looking for price to correct down towards this gap here before we can catch some bids. But again, I think the daily gives us very much the cleanest read over here, right? So that's where my focus is going to be, on getting above that daily gap. If we don't, we come back down, that's absolutely fine. Then we want to kind of see this area here start to hold. And the fact that obviously we've got this daily order block here as well. Again, this hasn't been confirmed yet, so we can't quite add it, just drawing it in, because if we do get the close above, yeah, price may want to retest this area. So if we don't close above that yet, it doesn't mean that we're just going to automatically go lower. It means that price could just be looking to retest this area, confirm that the buyers are still strong, and then price to move up from here. So that's Alchemist AI. Let's take a look at Render. So on a weekly scale, what do we got going on here? So no kind of gap inversion to write home about, although we did have a nice reaction here at this gap on a weekly scale. So price is in the early stage of a corrective move higher, right? This down close candle that's over here, this is what we want to see, or what I want to see, price closing above, then start to draw up to fill this inefficiency here and start making a move on these highs. Obviously, this is a weekly chart, so that is a fair way away. So with no more data than that really on a weekly scale to draw upon, let's take a look at the daily. And again, you can kind of see here we're a little bit of a similar situation as we have been with some of the others that we're looking at, which is where, except with this one, we've had this gap inversion here because we got the close above. We also now set this area as an order block. So these become areas of interest on a daily now. You can see this internal high here as an area that price is almost certainly drawing towards at the moment. So with this close above, kind of fighting these smaller gaps over here. If price closes in and around where it is now, inverting this gap to the left, then I think we hold this area and move up. If not, looking for price to come down, retest this area and hold it, close below this, this inversion, invalidating it, and we have a series of untapped lows or failure swings to the downside that we can look to attack. So with that, I mean, you can see the size of the expansion. The 4 hour isn't really giving us too much here. All right. So again, we can see these gaps. Price can come down to fill these. Ultimately, price might just run incredibly hot from here and look to take that out. But for me, this isn't a good place to long because it's very, very hard to define your risk here. Okay. So there we go on Render. Let's take a look at Ondo. So here we are on a weekly scale. Ondo. Let's take a look, and let's take a look back here as well and see what our plan was back there, see if that worked out or not. Again, you're going to see this sound like a broken record on a lot. Holding the weekly gap, we've had this big move down. Something that Razun and I discuss a lot that we really like to see are these areas of consolidation, holding. So we want to see this holding here. You've got price drawing into this. This was the area the buyers stepped in before this massive pump to the upside, right? So we've had this huge expansion move off of this consolidation, meaning that this area is once again of interest, okay? So we're in that area. That's basically what we've got here from the weekly. Moving this here onto the daily. What are we looking for here? Well, this was actually must have been on a 4 hour scale. So let's take a look. Well, I mean, you can even see on a daily scale, we didn't get the parameters. Unfortunately, we were looking for price to close above this level. Ultimately, if you don't get the bullish triggers when you're bearish, what do? You stick with the trend and you consider and you continue to trade this lower. So where are we at the moment? Again, we find ourselves in one of these key consolidations. All right. This is definitely of interest for me. We haven't even come close to testing this yet. This is the daily gap. And you can see with moves down, you know, especially on altcoins, because for liquidity issues as well, and the fact that they're a risk asset, a beta risk asset, when risk assets are getting a little bit of a pasting, then you see Bitcoin take big hits. And then these big sell-offs that leave these gaps with these inefficiencies are key areas to monitor when we look to kind of bring them back up. I mean, look at all of these wicks here. All right, we've just engaged with that level there, that swing higher. That higher, equal highs, this high make it kind of triple equal highs, really. We've just crossed that level, right? So label that up as our equal highs. You know, when you have this cluster of highs, flat highs or trend line liquidity like these, then you can, you know, ultimately when price engages with these, you want to be careful. A lot of liquidity up there for major players to step in, you know, take out late longs, get the squeeze in, and then move price a little bit lower. So for me, on a daily scale here on Ondo, I really want to see price closing above this gap, just to give an early stage indication that price is ready to move. And in doing so, as a minimal condition, I would want to see us set this daily order block as well, right? Price closing above here, ideally above this gap, showing a little bit of strength to move higher. At the moment, this looks a little bit flat, money not really running into this one. Well, it is on an intraday basis at the moment, but ideally looking for this to get above this level here. So again, we want to see that close above here. When that happens, if and when that happens, drawbacks to this area. and then we're looking to trade high, we do need to be aware that we've got this gap here and this bullish gap, making this area a balanced price range. All right, that's going to provide strong resistance there, in my opinion. So probably look to confidently trade this to around the 50% of that adjoined area, so around about here. All right, but again, really showing caution. In these kind of conditions, I like to build positions on the lower time frames, and then as they start to develop, you can turn those intraday trades into short-term swings, into position plays. But right now, we need a lot more confirmation here on Ondo. So let's take a look at TIA as well. Let's have a look. Take a look at it on Bitget. What have we got going on over here? So on a weekly scale, you can see the weekly gap here really doing its job, right, of suppressing price. Price drawing into this, again, failing to close above it, taking out people that were long too late here. Ultimately, price selling off. Price, when it sells off, looks for liquidity, or when it moves higher. Found that in this swing low. So a nice reaction to close above this swing low, telling us that buyers have stepped in here. So now looking for price to draw higher. Now, while I'm kind of interested in this gap, we have rebalanced it here, meaning that we've seen a wick go through it. Meaning I'm looking less as this area to reject price now as well. I will refine that on the lower time frames, but certainly that's how I'm looking at it. This high, however, is definitely an area of interest for me because, a lot of liquidity resting above that. Ultimately, on a weekly scale, if we have recovered this area, we'd need to close above this down and close candle to set a bullish order block, and we'd need to close above this gap to invert it. So I'm going to move to a daily, and we're going to frame everything a lot more around that. So once again, but the opposite, this time we can see the bullish gap on a daily scale doing its job. Price has drawn back down again. Look, if we bring out our Fibonacci, a really good way to kind of measure this out, we can see below the 50% wicks reclaiming this area, showing you that it's holding here and now moving higher. Obviously, we have daily targets here in the form of these equal highs. All right, that for me at the moment would certainly be a key area of interest. The liquidity of these equal highs within this bearish gap, that's going to be a key area for price to combat with. While we're respecting these down close candles, however, like this, we've got no gaps to worry about here. Price has set the bullish order block here on a daily scale. So now I'm looking for price to draw up into these equal highs. All right, we'll probably take a look at this on some lower time frames as well, because there could be some intraday plays available here. Quite efficient move up here on the 4 hour. Right. So, when I'm seeing that, I'm saying, okay, well, either price is looking to draw back down and retest this. But we have, I believe, actually, let's take a look. We haven't seen a retest of this area yet. So we could get that. Very interesting to look if we get any buy triggers coming down to this area here. If price is going to run really hot, and something I like is we've got more equal highs here as well. We can just see a lot of liquidity to the upside. And let's just see if price here on the 4 hour has had a tiniest close above here. Maybe not the most convincing with these upside wicks. But if anything runs hot here and we want some kind of conviction play, this is key here. Seeing price get the 4 hour close above here. Then I want to see if it holds intraday scalps up to these highs. I think would be acceptable, but probably with reduced risk because we're quite high in this move already. Moving back to a daily scale again, this one's looking quite healthy because we have set that order block and we have reacted at the bullish gap. Price is showing momentum, taking out these highs. We've had that expansion. Price is now respecting our bullish areas of interest. So looking for price to push towards these equal highs. In order to get bearish here, realistically, I'd need to see price close below this daily gap. Otherwise, you're just shorting this. On anything else on a short-term scalp, you're just shorting this down into support. So you need to be very aware of that and also very careful. So that was Ondo. That was on a tenner. Let's take a look at ZIL. What were we been looking at with ZIL? So this is interesting because, again, look, when you see these blue or these bluey grey boxes on the charts, they're kind of areas of interest. All right, I'm not really looking, but look, the reason behind this is because we see a decent reaction on the box here. When we lose that area here, price then sells off quite aggressively. And look, when we close above it here, retest this decent pump, retest this area, really big pump, and the origin of that pump is this consolidation, ultimately this one here as well. So when we lost that area here, we're looking for that to be reclaimed. But again, remembering that just because we closed below this, just looking to see the will of price here. How's it reacting at these lows? If it really started to melt away, this is a really good buying area for me here on ZIL, because this is the consolidation that led to this humongous move higher. All right, so that's an area that I'd certainly be looking to accumulate for the spot bags. So looking at that here on the weekly scale, what do the lows tell us? Well, quite simply, we got that low there. And we've also got this low here. Both have been swept. Both have been recovered quite nicely. Again, the prior week with no gaps here. The assumption is that price is still seeking liquidity somewhere, right? So on a weekly scale, we identified this weekly gap up here. And I think that's really where price is moving to. Let me just hide that away so it doesn't dominate our lower time frame screens. On a daily scale, if we're looking for that, you can see here, by the way, that was the low that we were targeting up. I think must have been, well, this is going to be all the way back when in February, looking for these, how price reacts at these lows, right? Look at the strong close that we get here. Even though we recover into this gap in this order block, these are the kind of moves we're looking for in order for price to kind of show us our hand a little bit, or show us their hand a little bit, sorry. So as we look here, first thing that I notice is this is the gap that's kind of containing price or capping the market. So let's draw that up and get our D in there. Now I want to see is price close above this. In doing so, close above those down close or bearish candles here. Again, setting the daily order block. Remember, it hasn't been set here. Price is ultimately, respecting this currently on a daily scale. All right, I've drawn into this area. Buyers have stepped in again. Close above this, a little bit similar to some of the other alts that we've looked at as well. And then I think it's quite exciting because price has got, a lot of these failure swings here to target, meaning that there's a lot of liquidity higher that will be really, really tempting. So close above here, and I think we make a nice run on these levels. So looking at that, I don't really need to drop this down any lower because, again, my conditions here are really based on the daily. If price does come down and, we start seeing price close below here, I think would be my condition for this. These up close candles, or if we confirm this one as an up close candle, but for now, until we do that, closing below here, do it as a dash line straight, isn't closed yet. The up close candles, that would be bearish for me. And then I would look for price to be moving down towards this low. At the moment, looking for this area to hold for some bullish continuation, and then looking for price to close above this daily gap. All right, guys and girls, ladies and gents, that is going to wrap us up today. I am needed on another call, meaning I can't really run over on this one, unfortunately. Apologies if I didn't get round to any of the tickers that you might have put in the chat. If I didn't get around to seeing them, please do pop back on Wednesday and I will take a look for you. But yeah, apart from that, please do keep an eye on the news, right? We've got, data heavy week coming in here. If we really want to sustain this risk bid, then we need traditional markets to play along as well. At the moment, the early signs are positive, but we do know obviously what has happened recently. We need to keep our eye on the data. We need to keep our eye on the news releases as well. And just make sure that we're not taking unnecessary risks, okay? I do think that the good conditions are going to return to us here. I think, we are going to be looking at some fiscal stimulus coming into the US, ultimately in refinancing their debt, they're going to have to buy those bonds. They're certainly going to have to sell bonds, right? And if the central bank is going to buy them, then the chances are the money print is going to come on, which will, again, add that stimulus, that quantitative easing into the markets. And I think it shapes up that, Q2 and on, we've had that sell-off now. There is still a lot of caution in the markets. Optimism starting to creep back in. So we want to keep an eye on equities as well. And just to give you a very quick look at those this morning, focusing on let's take a look at the S&P 500. All right, again, we can see the plan starting to play out here, right? Regain this area now, looking for this to hold. We've got that pin bar candle. We've got the close above. So we're really looking for this to move higher. Ultimately, as this and the NASDAQ look to move up, we're then looking to align that with good risk bid for the markets. Whilst we index, for example, we want to see this lower. Trump wants to see the dollar lower as well as the bond markets, which, we've seen this nice corrective move down here now, 38 basis points. We're now holding this area. This was the key area we were looking for a reaction, right? This pivot point around here. So as we hold this, really want to see bond markets just kind of calm down a little bit, become a less of an attractive prospects for the investors and for the funds. And then ultimately they might look to move towards more of a risk bid. All right. Also, please do remember that you can come along and join the Discord until the end of March. Come and make the most of the last kind of week week with us over there. You get access to all the calls, the trading team calls, who again, last month and this month have been very profitable once more. You can come and look at those. Every call that's posted is posted in real time. You get heads up on all of the details, stop loss, positioning, etc. And they're all updated, and all of our data is shared with all of our students and members. So it's completely transparent. You also get access to all of our courses, all of our education material, our amazing community, our indicators, and everything else that comes with the package. So if you're interested in free till the end of March, just pop onto Crypto Bell's profile, find the tweet, join the recovery program, 30 days, no tie-in, no anything else beyond it. Just if you want to stay with us, great. If you don't, come and make the most of it. And apart from that, wishing you all a fantastic week ahead. I look forward to catching you all on Wednesday again for the live show slightly earlier at 1100 UTC. Take care, legends, and have a fantastic week.